Company being analyzed today is TruAlt Bioenergy Limited, India's largest ethanol producer. Today, we're going to analyze the company's financials, what it actually does, and future growth drivers. So let us start. First, we have a market cap of 4,128 crores, so a pretty mid-cap company. Current price of one share 482 rupees. The return on equity 28.4. Nice return on capital employed, decentish 14.2. Stock price to earnings ratio 32.4. It had a horrible second quarter, but it was planned. It was planned. We will discuss that. So, let us now discuss first the company's financials, the profit and loss statement we have from 2023 all the way to 2025. We have sales, we have operating profit, also known as EBITDA, operating profit margin. Pay attention to this. Pay attention to interest on loans. Finally, we have profit before tax, and after that, we have net profit. So, in fiscal year 2023, we have sales of 762 crores and 14% operating profit margin company. So double digit operating profit margin. And then we move all the way to fiscal year 2025. The sales have ballooned to 1,908 crores. Operating profit has reached 309 crores, 16% operating profit margin, 104 crores of interest payments on debt. So it does have a lot of debt. Remember that. 159 crores of profit before tax, only paid a 8% tax rate, the percentage tax rate, leading to 147 crores after tax. Okay, net profit. So in the last 12 months, the company's sales have grown by 56%, while profits have grown by 361%, but again a lower tax rate. Moreover, when we move to cash flows, we will focus on cash flow from operating activity. The company is cash flow positive at least for the last 3 years. In March 2023, 233 crores of cash flow from operating activity. In 2024, only 35 crores. So fluctuating at least 1 year, and 2025 recovered back to 329 CR. So at least as a base, it is cash flow positive. Now, company overview. Okay. So what do we see? 5 units, 2000 kiloliters per day is the total capacity of the company, the total fuel making capacity of the company. Okay, 2000 kiloliters per day and 1300 kiloliters per day is dual feed. This dual feed is the reason why its performance this quarter was so abysmal. We will discuss that. We will discuss that. It is one of India's largest biofuel players, and it is the largest producer in India, ethanol producer in India based on installed capacity. Moreover, while ethanol is a very important revenue stream for it, next revenue stream for it is CBG, compressed biogas. So we got ethanol, okay, we got compressed biogas, which is related to the production of ethanol as far as I remember. One of the first producers of compressed biogas under the sustainable alternative towards affordable transportation scheme introduced by government of India in 2018. And it has one CBG unit, one compressed biogas unit operational, the capacity of 10.2 at TPD. I'm assuming that's tons per day. 16 new fields, 16 new units being proposed, 16 new units being proposed. So let us just explain this. What is this dual feed? Basically, to produce ethanol, we need raw material. Raw material in this case, as far as I remember, is sugar molasses. Molasses. The problem is sugar is produced for only a few particular months. A few particular months, sugar is produced, you get the molasses, but for the rest of the months of the year, you have no molasses, you have no ethanol. Your plants, your 2000 kiloliters per day, these five installed plants, they can't produce, they're empty for the remaining months. Now, with dual feed, see, dual feed, instead of molasses, in addition to molasses, you have grains. Grains is your next raw material you can use to produce ethanol. So, in the months where you have no molasses, you now have grains. So your capacity can be utilized for more and more months of the year. We have five plants. You can pause and see where they are located. They're all in Karnataka. Okay. All of the plants are in Karnataka. Let's move forward. Then, long-term highlights of the company. Okay, long-term highlights. First, operational capacity ramp up. Ramp up means a massive increase. So, units 1, 700 kiloliters per day, unit 2, 500 kiloliters per day, and unit 4, 200 kiloliters per day underwent temporary shutdowns during the last 4 months for commissioning of dual feed plants. So, in order to modernize these plants, in order to have them have dual feed as a feature, they had to shut down these plants for 4 months, which led to way less production and this abysmal performance the latest quarter. Okay, now from quarter three, all 5 units are expected to run at a full 2000 kiloliters per day capacity. So, full scale stable operations will now happen from quarter three onwards. Then, compressed biogas expansion. There's been a JV, a joint venture agreement with Sumitomo Corporation to develop compressed biogas plants across 5 identified locations. And then 80 crores is being tied up to deploy over three of these locations. Out of these five, three of these locations, 180 crores supported by NABARD, 180 crores will be tied up. And finally, construction of 3 out of 5 planned units has been commenced, with commissioning started from quarter two fiscal year 2027. So from these new compressed biogas units, when will revenue start coming in? Quarter two fiscal year 2027. Then dual feed integration. 113 kiloliters per day out of the total 2000, meaning 65% of total capacity is now converted to dual feed during this quarter. The operating days of this facility, the 65% of total capacity, will now go from 140 days in a year to nearly 330 days. This shifts TruAlt's ethanol vertical from seasonal production enterprise to a near year-round operating model. So earlier it was seasonal because the sugar molasses raw material, you can only get it for certain months. Now with dual feed using grain, I believe it's grain as raw material, you can use it for many, many more months, leading to more production, obviously, because yeah, leading to more production. Then retail network expansion. Basically, they will now have their own biofuel stations where they can sell biofuel directly to customers. For example, motor spirits, diesel, ethanol blended petrol, E20 blended fuel, they can sell it directly to customers. So they're opening their own stations. So they have 7 outlets currently operational, 7 retail network outlets currently operational. They're launching 6 more by end of this quarter three. And they want to have around 250 biofuel stations, I believe, in the next 5 years. So currently 7, 6 more. So massive expansion in revenue from this new segment and 250 over the many coming years. This point is extremely important. This can be very important. Sustainable aviation fuel. New business segment, sustainable aviation fuel. TruAlt is entering into a memorandum of understanding, kind of a non-binding agreement with Andhra Pradesh Economic Development Board, Government of Andhra Pradesh, for a 2,250 crore investment for ethanol to sustainable aviation fuel plant in Andhra Pradesh. They're entering into another memorandum of understanding with the Government of India, undertaking to evaluate a joint venture arrangement for establishing a sustainable aviation fuel plant in India with the objective of commissioning and operating the facility over the next 3 years. Okay, now remember, just like ethanol has been blended into automotive fuel with petrol for cars, it's been discussed. The government of India actually set a target that with jet fuel, ethanol is going to be blended in jet fuel also. So targets have been set, and this can be a major opportunity. And it has already entered into an MOU with Andhra Pradesh, basically the government. TruAlt is going to be investing 2,250 crores to establish this plant. They're going to get some subsidies, I believe. But yeah, this is a new business. So this is one major growth driver along with the retail network expansion, along with CBG expansion also. Sustainable aviation is a long shot, multi-year opportunity. Later comes the balance sheet with a particular focus on the consolidated balance sheet.